Good morning, everybody. It is August 27th, 2023. This is the weekend report. Here I'm just going to update some things. Once a week, we're going to kind of go over charts. Generally, this is something that I think is good practice for any trader in general. I do not want if I'm training somebody to learn how to trade, I do not want them looking at the charts during the opens when the market's open. If you're a day trader, yes, you have to. But if you're a swing trader, long term trader, trading at least most of your trades end up around at least a 2-3 week time frame. You don't need to look at the market while it's open all the time. If you're even longer than that, you can look at it just on the weekends only. Not saying you have to do that, but try to get in the habit of after the close, I'm going to look at and do my analysis. Like when it's open or you have a position on, you're like, okay, let's say we're long, the uranium trade this week, and we're trying to analyze whether we should be long it, add to the position, and the market's open or something. You're going to make bad mistakes. Your money's going up and down. You just can't think clearly at that point. So we're going to go through this once a week on the weekends, just to give everybody a what we're going to do, what's the plan, and then we kind of know what we're going into for the week. And then we don't have to deviate. We don't have to make up things. We don't have to like trick our brains aren't tricking us into doing things we really don't want to do. Starting out with chart one, SPX RSP. So if we're looking at the equal weight S&P, which is on the bottom, we're seeing that it made this is a 150-day Donchian channel, which is a very long-term trend indicator. We see it made a 150-day high all the way back in early February. I think that was like maybe February 1st. Its peak was in February. It made a 150-day high in early 2023 in January. And so if we're looking at that, we're going, okay, well, the rally that everybody said was so thin, actually it started out the opposite way. If you look at the Dow, even the Dow had a major run. Dow, even though there's not many stocks in there, it's a little bit more diversified and a little less tech heavy than other things. So you see a little bit of more movement in there. You saw more movement in the European indices and so on. And that's also based on washed out. You had positioning getting so bearish in some of these things. Like Europe, there was no reason to really be long Europe. I'm not sure there still is right now. It doesn't matter. We don't get paid because we have reasons to. We get paid on price. And so at certain points, positioning gets so washed out that we see these reversals and the market continues to go up, even though, there's no real reason. It's just because there's nobody left to sell. And so we saw that early in this rally, starting at the bottom in October 2022. The beginning of this year, that kind of ended. It moved into our large cap tech names. And that's really why you see the S&P making a 150-day high later and rallying even more than that. But the equal weight S&P started to catch up. Right when everybody said breath is terrible, it's the end of the S&P 500 as we know it. We started to see this breath start to catch up, and then it made another new high on the equal weight S&P. Not new high as an all-time, a new 52-week high. And as we made a new high in the equal weight S&P, then it started to curl over once again. And so we'll see where this ends up. This is the hard thing about trend trading. If you're a person who's trading breakout strategies, even if they're shorter term, even if they're longer term, whatever they are, sometimes you're going to be buying things as they're overbought. And that doesn't mean it's a bad strategy. I mean, look at, if you look at 150-day high in the S&P, if you went back further in this chart to when 2020 gave the first buy signal, you just kind of rallied that all the way up until, you got a sell signal. Like, granted, most of the time, if you do a long-term strategy, your sell signal isn't going to be the same as your buy signal. So 150-day high buy signal, most of the time you've got a 50-day low as your sell signal. Your 50-day low came pretty early into 2022, and then you didn't get any buy signals up until March. That's not how we run our systems. Our systems are a little bit more short term and a little bit different than this. But I'm just saying, like, if you're getting used to understanding, like, let's say you back test and you find that this system for your time frame has a great strategy. Just be used to you're going to hit a new high sometimes and you're going to give some back immediately right as you put on a position. And it's going to be super frustrating. And sadly, like, that's the thing. The market rewards the hardest trades, and breakout trading is kind of the hardest type of trading. You're going to be frustrated. You have to have really wide stops. You have to be okay with losses. You have to have the discipline to have really small positions. All of that, and the market will reward you with that. But once again, like, it's maddening. So that's part of the reason why I say it's not for everybody. SPX AD line. So in chart number 2, if we're looking at the advanced decline line, we're seeing that it is holding above those old highs. We are sustaining up here. I don't think that the S&P is looking as bad as everybody else is thinking. Everybody wants us to call tops, right now, and that's the end of it. I could see us chopping around. I think I'm gonna make the most boringest call ever. Chop. I'm gonna say that it's a choppy call. That's what I'm going to say for the S&P. We're going to see a lot of chop. Number 3, Clone Oscillator. This gives me oversold signals. We did get into that oversold zone all the way down, past the red zone, and now we're bouncing up. We're getting back and all clear over the blue line. We'll see where that ends up next week. This is a bottom. Bottoms are messy, whether they're a normal pullback or a bottom in a bear market, whatever you want. They're messy. They're tough to trade. So just be ready for anything here. Keep your mind open to the fact that we could go up or we could go down, like having a stop a little bit under those old lows. If you do have a swing trade on for some positions for some reason, that's not a bad idea. Even my in the Nasdaq, my position, my stop would be just a little bit under those old lows. We didn't get stopped out yet at the Nasdaq position, but we'll see where we go from here, and that's a long-term portfolio position. Chart number 4, put call ratio. What I like here and why I've also brought this up is that we're seeing, like, we made these bottoms. The blue line, if you look at that blue line on the chart number 4, you're seeing most of the time when we get these extreme readings, we're seeing temporary bottoms. What I like is when we're also seeing more puts being bought on every little dip. That tells me fear is still out there. I want to see that. I want to see everybody be very bearish and hate the rally. Think it's done. Everybody thought it was done this whole rally anyway. So most of the time, people will continue to think that way. It's like in 2022. Traders weren't in a good mindset coming into 2023, no matter what. Every trade you had, long or short, honestly, towards the end of the year got whipsawed and terrible. You had terrible returns for most people near the end of the year. So they transfer that thinking into the next year. And as they're transferring into the next year, they're going, well, I'm just going to be short the whole time because shorting obviously made money. And really, it's not that one or the other made money. It's that sometimes you're not in a market that is going to be conducive to your type of trading. Day traders probably ripped the market's face off last year compared to a trend trader, for example. Even though there are some trend traders who had some good returns, like we had good returns last year, but most of those came early in the year. Towards the end of the year, it was tough. So you just have to know what market we're in, what strategy will work in that market. And right now, I'm seeing we're kind of in a trending market, and that's mainly based on positioning. Still, people going back and forth and having old wounds from last year. Next chart is bulls percent S&P. For me, I'm just kind of looking at this as it's a short-term swing indicator. Not seeing a buy signal yet, so if you're a short-term trader at the moment, it's still to the downside. Semiconductors Dow chart number 6. That I really like. When I'm looking at semiconductors, I'm not seeing anything that's telling me that, like, the rally is over yet. I don't know how. I'll be honest, like, it doesn't make much sense to me. I'm not looking at this and going, like, I know why this. I don't have any idea. I know that when I put on a position, let's say it's even a fundamental position. Let's go back a little bit. They put on a fundamental position, and I have a reason to believe semiconductors are going up, and that's all the way at the beginning of this year, let's say. And then I get a buy signal based on the technicals as well. I also see positioning as bearish. I buy. At that point, I'm not sitting. People will ask me about my trades all the time. Oh, are you managing it this way? What are you? If you, they'll send me a piece of news and be like, "Are you selling semiconductors now? Are you selling tech because of this piece of news or whatever?" No. Once the trade is on, the only thing that's going to get me out of position is my stop loss and my exit signal. That's it. Nothing else. It's either going to get stopped or I'm going to get an exit signal. I stay away from trying to speculate because my brain is not in a good position to make good decisions when I'm already in a trade. Once I'm in the trade, that's it. Let it run. Semiconductors, I could have talked myself out of that trade a million times. There's a million reasons to get out of it, and not many to stay in it. However, it just kept going up. So, that's something to think about in your models. Something I learned many years ago from, I think it was in the first stock market wizard book or market wizards book. Chart number 7. What's interesting about this? And it's XLK to QQQ. So I always talk about during downtrends, the things that are the strongest will hold up the best. So look at this. XLK against QQQ. And we can go back, go back to 2016. What did we start to see? The big tech started to lead, meaning XLK. And then, 2019, what happened again? Big tech started to lead, and that continued. 2020, big tech gave a little bit back to the NASDAQ, especially on the way down. Most of the biggest companies got hit pretty badly during that time. But what happened when the bear market kind of started, in 2022? Well, big tech started to go up a lot again. And it kind of has led this year. So most of the time, wherever strength is running to, and however you dice that up, you could do it against the SPY, the XLK to the QQQ, whatever, individual stocks against sectors, whatever you want. Just finding the strongest of the strongest will be helpful for you. And then the next charts, we're looking at relative strength in style factors. So relative strength in style factors is kind of when we're looking at relative strength in style factors, we're looking at month to date, 1 month, 3 months, 6 month, year to date. So when we're looking at all these things, we're seeing that year to date, IPO quality, growth, large cap growth. Those are the things that are up year to date. Nothing else is really up. This is also giving weight to the reason why people think it's a very thin rally. It is. It just is. It has been a thin rally. It's gone through changes, but the real performance has been in large caps and large cap growth mainly. So that's telling us something. But when we're looking at the last month to date, seeing large cap growth has actually outperformed the S&P. That's interesting. It's green across the board year to date all the way to month to date. Quality is also up across the board year to date and month to date. So we're going to be, if you're going into sectors and you want to figure out how to be positioned, those are good places to be positioned. Next chart, 8, relative strength. So relative strength is, we're looking at what's holding up the best in these periods. So the first one is 3 months. This is number 8, chart number 2. In 3 months, we're looking at OIH being the best performer. That's oil services. XLE, the large cap oil names are hanging out a little bit back there, but they're still catching up a little bit. Semiconductors right behind that, ITB, home construction. So we're looking at those sectors holding up really well. Month to date, past 1 month period, XLE is holding up the best. XLE actually is the only thing that's positive, so that's also telling us something. Gold, next chart. Gold is really holding up really well. I really like the way gold is holding up. Um, I think that we're going to see gold start to make a run and it's going to break out to the upside. I really want to be in that as it breaks out. I still have a long-term gold position. It is very, close to a stop as well. But if you guys, the shorter term time frames, you're obviously going to be out of that position. And not to mention, if you just don't have a position yet, I have that position all the way from that false breakdown that happened last year. If you have a breakout around these areas and we get over these old highs, you absolutely are going to want to be in that trade. Next one is silver. Silver looks very similar. I think silver gold ratio is even stronger. So I think silver is another good place to be looking for trades at the moment. Obviously, wait for that breakout to the upside, but we are over the MAs. We're holding up over most of the MAs. It looks good. Gold needs to catch up to that as well. Gold COT, COT giving a buy signal. As we're giving a buy signal for the COT report, we're seeing that, I would love to see gold gap out next week, or make a big move on Monday or Tuesday. That would tell us a lot, but we are into a buy signal from the COT reports. So that's good. On a little pullback that high up, getting a buy signal is very good. Platinum, same thing. It's an uglier chart, but I'd love to see a very strong week from this. If I saw a strong day on Monday or Tuesday, once again, that would also be another buy signal. Wait for my systems to actually give me that as well. Then it'd be a full position. Chart number 13, soybeans. Most ags are bottoming and they all look very similar. That's true. They all look very similar. They're just kind of consolidating around this side. We're seeing a ton of commercial buying in them. This is really setting up for a major rally in the ag space. Chart number 14, soybean oil. Soybean oil is holding. We never even got a close under that 40-week moving average. So that's really good. So if we're looking at that, we're seeing that, okay, this thing could continue higher. Sorry, that's a 40 week. That might be a 40 day. But we're seeing that moving a lot higher. It's looking really good. Soybean oil is solid here. I want to see these volume bars. If it gets over those volume bars, it's another buy signal. So, having a position already, I'm just going to sit still. If you don't have a position, wait for it to clear these old highs, and boom, you got another trade right there. Mexican peso, chart number 15, on a run. Nothing to do there. Hold the position. USD, as strong as the Mexican peso is, the US dollar is not quite as strong. Or sorry, the US dollar is strong as well. That's what I mean. So the US dollar being strong as well, it hasn't really broken out of that zone yet, but man, I'm not betting against the dollar here just yet. Keep waiting on that one. 17, huge range in Bitcoin, massive range. We got a neutral signal the other week. Now we're just waiting. If we break out to the upside, I'd buy it. If we break out to the downside, it's going to give me a short signal. One way or the other, it's going to be a trade one way or the other. So just be ready for it. Sell stops below that support, and then buy stops above that resistance. Sugar, chart number 18. Sugar, we have these breakouts that have been happening. Are we building another one here? Possibly. And the fundamentals, and I already went over this the other day. If you haven't seen it, go back to my post on sugar the other day. I think it's called Everything You Need to Know About Sugar. Check that out. But I'm really bullish on the sugar space. Once again, that doesn't mean it's going to be just go up like crazy today or tomorrow or the next day. It means that I'm going to be interested in buy signals and continue to take buy signals. At the moment, I am long. I continue to stay long. Obviously, there's no reason to sell just yet for me. So we'll see where that ends up. All right, everybody. Hope you guys had a good week and a good weekend, and let's have a great week of trading. Hit me up on the chat more. I think we should all be posting trade ideas and stuff a little bit more on the chat. That'll help get this around. This one I'm going to be putting out for everybody, not just paid subscribers, but after this, they will all be paid subscribers only. All right, guys, have a good one.